Folks, I hear it all the time. Someone calls into the show, their voice is heavy, and they say, "Dave, I'm on disability, so I guess owning a home is just a dream for me." That statement right there is a myth, a lie that has held too many people back. Being on disability does not automatically disqualify you from getting a mortgage and buying a house. It is simply not true. You have been told a story that keeps you stuck, and today we are going to tear that story down with the truth. The American dream of homeownership is not reserved for a select few. The problem isn't the disability income. The problem is a lack of information and a whole lot of fear. People assume their income comes from a government program or an insurance policy instead of a traditional 9-to-5 job, so lenders will slam the door. That's wrong. Lenders manage risk, not judge you. They have a checklist. Your job is to know it and show up prepared and confident. When you walk into a lender's office, they are not looking at you and making a personal judgment. They are looking at numbers on a page. Their entire focus boils down to 3 simple, powerful ideas. The first one is stability. Is your income consistent? Does it show up month after month like clockwork? Lenders love predictability. An income that bounces all over the place makes them nervous, but a steady, reliable payment gives them confidence. Disability income is often one of the most stable incomes out there. That's a huge point in your favor if you can prove it. The second thing they care about is consistency. It's about the proof, the track record. Have you been receiving this income for a good while? They'll look at bank statements to see deposits hit on the same day, same amount repeatedly. That history shows it's not a temporary fluke. It's a dependable stream they can count on you to receive, to pay the mortgage. The third, and absolutely critical piece, is continuation. Lenders aren't just concerned about the last 6 months. They look to the next 3 years and beyond. They need assurance the income won't stop after you close. This isn't personal, it's just business. SSDI, supplemental security income. Long-term disability benefits from a private insurance plan. Each is treated slightly differently, but the core principles apply to all. Knowing which one you have is the first step to gathering the right proof. Alright, this is where the rubber meets the road. You cannot just walk in and say, "I get disability, trust me." You have to prove it with a rock-solid paper trail. Think of this as building a case for your financial stability. The most important document you will need is your award letter. This is the official notice from the Social Security Administration or from the insurance company. It details your benefits. It states who you are, how much you are awarded each month, when the benefits began. This letter is non-negotiable. You absolutely must have it. Next, you will need to back up that award letter with real-world proof of payment. This means bank statements. Lenders will typically want to see at least the last 2 months, last 3 months, and sometimes more. They will look for the electronic deposits that match the amount on your award letter. Seeing that money actually arrive in your account on a regular schedule turns the theoretical income into a tangible, proven reality. Do not be the person who shows up with messy, disorganized records. Have clean copies ready to go. Now for the continuation part. Lenders need to know this income is not ending next month. For Social Security, the award letter itself often contains language that satisfies this requirement, especially if it does not list an end date. Sometimes, a lender might ask for a benefit verification letter, which you can get directly from the Social Security Administration. If you are on a private long-term disability plan, the lender will want to see the policy documents that state the terms of the benefit, including how long it is intended to last. In some rare cases, they may ask for a doctor's letter, but usually, the official award documents are enough. Let's be clear, having your paperwork in order is half the battle. This is not the time to be sloppy. Create a folder, either physical or digital, and gather everything before you even talk to a lender. Get your award letter, your bank statements, and any other documents that prove the long-term nature of your income. When you walk into that meeting prepared, you send a powerful message. You are saying, "I am serious. I am organized. I am a low-risk borrower." That level of preparation can make all the difference in getting a yes. Your disability income might be perfectly documented and stable. But that is only one part of your financial picture. Lenders look at the whole story, not just one chapter. A huge factor is your credit score. This 3-digit number tells them about your history of paying bills on time. It shows them if you have been responsible with credit in the past. A high credit score screams that you are a reliable person who honors their commitments. A low score, well, that raises red flags and can stop a mortgage application dead in its tracks, no matter how good your income is. Another massive piece of the puzzle is your debt-to-income ratio, or DTI. This is a simple calculation. A lender adds up all your monthly debt payments, car loans, credit card minimums, student loans, and divides that by your gross monthly income. That percentage tells them how much of your money is already spoken for before you even think about a house payment. If your DTI is too high, they get nervous that you will not have enough cash left over to handle a mortgage. Even with steady disability income, having too much other debt can sink your chances. Pay down debt to lower your DTI, okay? Then there is the down payment. You have to show up with some skin in the game. Saving up a down payment is a sign of financial discipline. It shows the lender that you are capable of managing your money and planning for the future. While some loan programs like FHA loans, VA loans have lower down payment requirements, coming to the table with a healthy chunk of cash is always a good thing. It reduces the lender's risk and shows them you are financially invested in the property. It is not their house, it is your house. There are also specific loan programs that can help. FHA loans are insured by the government and are often more flexible on credit scores and down payments. If you are a veteran, a VA loan is the best deal in town, often requiring no down payment at all. Even some conventional loans are perfectly fine with well-documented disability income. The key is to find a loan officer who knows what they are doing and has experience working with these types of income. Do not be afraid to shop around for a lender who understands your situation. So, what is the takeaway here? The big, hopeful, powerful truth. Being on disability is not a roadblock to owning a home. It is just a different path. The myth that you are automatically disqualified is just that, a myth. Your income source is less important than its stability, its consistency, and its documented continuation. Stop listening to the fear. Start operating on the facts. The dream, a place to call your own, build equity, pass on to your kids, is absolutely within your reach if you are willing to do the work. Be more organized and more prepared than the average buyer. Now get out there and get started.